Exchange-traded funds have gained popularity over the years, but with so many to choose from, how do you find the right ones to invest in? With us today is MoneySense writer Michael McCullough to share his views on the best ETFs in Canada. Michael, welcome to The Wealthy Life.
Glad to be here.
So let's start with the basics. ETF, exchange-traded funds, what are they?
Well, if you're familiar with mutual funds, it's a similar kind of idea. It's a pool of money that is put together to invest in, usually it's stocks, but it can also be bonds or other assets. And those are designed to earn a return for the holder. And ETFs, what makes them different from mutual funds is they're actually traded on a stock exchange and they have a ticker symbol like a stock. So that makes them very easy to buy and sell. You don't have to do any paperwork. It's an instantaneous process.
Right. So buying an ETF, you get an instantly diversified portfolio of a bunch of underlying stocks and or bonds.
Correct.
With one order. Mm-hmm. So how about the fees associated with them? How do the fees on an ETF differ from that of a mutual fund?
The fact that there's so many ETFs out there, there's more than 1,300 trading on Canadian exchanges, means that it's a very competitive environment. And for that reason, it has helped keep management fees down. A big part of the market is what's known as index funds. And these are funds that are basically, they put in all the stocks in a stock index like the S&P TSX composite. And that way, you're not paying a manager to pick the stocks. It's just a standard group, and your returns will pretty much mirror what happens in the marketplace.
Right, minus a little bit of a fee.
Right.
What do the fees range from on ETFs?
Well, for the lowest cost ETFs are they're 0.06 of 1% of however much you have invested per year.
Okay.
And so that's a really small number. They can get more expensive. There are actively managed ETFs that can range up to, at the most, the most expensive ETFs out there won't be as much as 1% of your holdings per year.
Right, but as you said earlier, if you pick one, the lower cost one is just mirroring an index. Mm-hmm. There's no skill involved in that. So you're not paying a money manager to go in and do the research of the underlying holdings,
right,
buying and selling of individual positions to try and maximize return. It's basically just following the index, which isn't such a bad thing to do in some cases.
Not at all. That's what's known as passive investing. And if you actually look at the statistics, in any sort of 10-year period, fewer than 20% of the active fund managers are able to beat the index. So this is not, this is a really smart way for an average investor to ensure that they're doing as well as pretty much everybody else out there.
Now, with over 1,300 to choose from, where do they start?
Well, this is where the MoneySense Best ETFs list comes out. And there are a few other lists of recommended ETFs. We have an expert panel of investment professionals who look at everything out there. Our list tends to favor index funds, tends to favor low fee funds. We also like funds that are larger. That means there aren't any transactional difficulties if you want to buy and sell. There isn't what's known as a big bid and ask spread between prices.
Right, because you mentioned it trades on the exchange, mm-hmm, and the way to make a trade happen is you need buyers and sellers.
Correct.
And if there's not enough buyers or sellers, then the price gap can get pretty big.
Right, and that can end up costing you. It can cost you a couple of percentage points in what you're paying for an ETF.
So what are some of the specific criteria you look at to make the top of the list?
Well, ideally, you want good diversification. I mean, that's the principle of buying a fund versus a stock to begin with. Is a single stock, a company can get sued and their price can go down and bad things can happen. But if you own many stocks, and an index fund might have anywhere from 50 to 250 stocks in it, you are going to get the average performance of the marketplace.
So if one stock goes under or has bad performance, it's really going to be a
not
little
big
blip.
deal.
How about if you buy an ETF that is sector specific, though? That's higher risk yet again.
Yes.
So if you buy something that's all financial services, for example, and the financial services pulls back or goes up, like it's kind of all your eggs in one basket.
Right. There's certainly plenty of selection out there, and generally we stay away from them in our best ETFs, but there is opportunity if you, for example, work in an industry and know things that are going on and you feel you have special information where you can earn more than the market average. By all means, there's lots to choose from in terms of particular sectors, particular stock characteristics like low volatility, for example, is a good area to invest in.
And different risk levels. So these ETFs could be conservative fixed income, or they could be aggressive growth in all equities. So where can people go to get more information and see what's on the current top ETF list in Canada?
They can go to MoneySense.ca. You'll find the best ETFs in Canada and a whole lot more there.
Michael, thank you for being with us today.
Thank you.